Absolutely. Let's have a look at the prospects for the session just under 15 minutes to go in India. This is what we have for the Nifty. Some $43 billion wiped off the Sensex in recent days due to changes in tax codes there in India. Nevertheless, we're looking like a recovery there for the Nifty, up by 0.5%. The rupee lurching upwards, the dollar down by 1/3%. The 10-year yield there, again, we're seeing more and more upside for India 10-year bonds as the yields drop there towards that 650 level. Okay, talking of India, the distress in the country's aviation industry is far from over. Of the more than 600 aircraft in Indian skies, all 18 Boeing 737 MAXs are grounded. Also, we've got high fuel prices, rupee depreciation, and debt all weighing on these companies as well. They're like millstones around the industry's neck. We've got Jet Airways and Indigo continuing to struggle. Our next guest sees Indian Aviation entering a period of uncertainty. Mark Martin is founder of CEO of Martin Consulting, an aviation consultancy which works with airports, regulators, and airlines, and he joins us now from New Delhi. Thank you so much for joining us, Mark. So, Indian Airlines are entering a phase of uncertainty. Tell me when they ever were living in one where there was a degree of certainty even.
Good morning, Richard. Yes, indeed. I mean, the sad part about the airline business globally is that we're so exposed to currency risk, economic, trade, embargo, tariffs, that it just makes the whole environment more and more complicated. But what we're seeing in India has never been seen before. We have one of the largest traveling markets in Asia. Along with that, and then you start shrinking the market by lowering the fleet. With airline closures and the 737 MAX challenges of the government, so policies and framework not being very conducive. So it's starting to look like a recipe for disaster. And this is probably when you need to push that panic button and pick up the red phone,
Mark, the thing is about it, it's not as though the government's helping things here in any way, shape or form. In fact, it's making it more and more difficult for these companies to have any longevity. Why?
Well, we're still one of the heaviest taxed aviation markets in the world, Rishad. We've got a GST at 18% on services. We've got a VAT which has not been rationalized. I mean, a lot of these are quick fixes, and also I think, unfortunately, we haven't evolved to how Southeast Asia and the rest of Asia has when it comes to aviation. We still look at it as a different industry, and it's not considered part of infrastructure in the same way Malaysia and Indonesia and Southeast Asia looks at it with ASEAN. So we need to get our game plan going, and I'm hoping that in the next couple of weeks the government holds an emergency meeting to try and resolve a lot of which needs to be sorted. We just had a budget about 3 weeks back, and aviation gets a complete. They ignored it. They haven't even factored any policy except for government, rhetoric, which is mostly gimmicky.
Mark, let's focus a little bit more on the Indigo issue, because the founders are airing their dirty laundry quite publicly now. In fact, it seems like it's turned for the worse. How do you see this feud playing out? Is this really more about corporate governance, or is this all about controlling rights?
Well, it's territorial. They're out there looking at who's going to be controlling and who's going to be, who's best suited to manage and own the company. They had a shareholder agreement that expires in September and October. So this is when they started to stake their claims and pitch their flags. The accusation is baseless because Indigo comes with a legacy and a heritage of running aviation-related services, and one of the partners is accusing the other of what you call related entity transactions, which is absolutely unfounded and untrue. They should take this indoors. I do believe they should kind of keep it in the board, get the board to counsel board partners, and come to a mutual resolution and not take it in the market. I mean, yesterday their stock dropped by over 20%, 20 points. So, and that was absolutely uncalled for.
Does this spat have a potential to delay what Indigo was about to embark on, which is this very ambitious expansion push outside of India and into the long-haul routes sector?
Well, I mean, they've already put the money up front for the long-haul aircraft, the 321LR Neo from Airbus. They've got their global network up and ready, so they pretty much should be out there, setting up shop in new markets and starting services. I don't believe this will affect the airline's operations and expansion. Because what stays on the board, remains on the board. It really doesn't trickle down to the guys working on aircraft or flying the aircraft or flying operating flights every day. So it's less likely that that's going to happen. But we never know. I mean, at most we might look at an ownership change, or we might look at a QIP or a placement or a private placement of one of the shareholders. So the next couple of weeks and actually the next 60 days is pretty crucial for Indigo, but nothing dramatic.
Well, certainly we've been watching, when you talk about drama, we've certainly been watching what's been happening at Jet Airways. It's in court at the moment. It's at the moment in the debt recovery court, so it's effectively bankruptcy proceedings here. It could fly again, or could it? That's one question. The other question, if you'd like to answer afterwards, is where does this all leave Air India and the potential for a sale of this, which nobody wants, a company nobody wants to buy?
Well, Indians are all about drama. I mean, hey, somewhere traits of Bollywood trickle in our business. So, hey, that's how we are. But, on Jet Airways, it's very unfortunate because SBI, the bank that was entrusted to find a possible suitor, knight in shining armor, let them down. And they should have put some money in to keep the airline afloat, but they just watched lessors and banks take away aircraft. So that was their bad. Air India, I think the whole approach to Air India is not right. Air India is an asset-rich, asset-laden company, and if you want to sell Air India, you need to combine all the assets, put them together, and then sell them. You can't. It's not an each sold separately deal. I mean, it's a 80-year-old airline, so they got properties all over the world and MROs and spare engines, and so they have it all. So, but I do believe that the government has figured this out, and they're trying to place some checks and balances, which should help them find the right partner. I don't believe a garage sale is the way for Air India. I think you need to get a partner who can strengthen it and make it back to what it was in the 60s and 70s, and I hope that happens.
Mark, thank you for joining us today. Mark Martin is the founder and CEO of Martin Consulting. Right, lots to come on Bloomberg, including, of course, the start of the session in Mumbai.